Okay.
So thank you again, Philippe, for willingness to present at the seminar. I already said, so you have 45 minutes plus 15 minutes for question and answers, but you can take more time, of course, and anybody can just raise hand and ask questions in the meantime, right? I will also take advantage of this. So we look forward for your presentation. The floor is yours.
Thanks very much. Right. So this is joint work with a bunch of lovely people who are from Benin. And before that, I would like to thank Lucas for the invitation. I'm very happy to discuss this work. This is very preliminary, so there will be a bunch of tables, but we still have a long way to go before we get to a final polished product, for various reasons that I can expand on later. But anyway, so we're looking at contrasting the impacts of two formal devices which are used for saving. I will describe them and what I mean by formal, and we're working in Benin. So Benin is in West Africa. This is based on a large ESRC grant from the UK. And before I make any progress, I would like to hide this here, sorry. There we go. So before I make any progress, a few bits of info on Benin. So it's a country that is beside Togo and squeezed beside Nigeria. You can see Lagos at the bottom here. So Nigeria is the big brother beside the tiny Benin. It has a population of 12 million, low density of population. It's and a very low GDP per capita. Indeed, it's ranked in the last quartile worldwide. So it's a poor country. And there will be figures down the slides here, which are in francs CFA, which is the local currency. I've looked today at the exchange rate, and about 1,000 francs CFA is more or less 25, 26 rand. So that might be helpful for you. The areas that we survey in this work are threefold. So we have Cotonou, which is the largest city in the south. Cotonou is just beside Port Novo. It's on the coast. It's not written here because Port Novo is technically the capital city, but Cotonou is the largest city by far. So we have one large urban environment. We have Abomey, a small town in the center of the country between Port Novo and Parakou in the middle, just beside the name Benin. And we have Parakou itself. Now, why we have these three sites? It's because they cover nicely different environments. So first we have towns, middle-sized town or city, and large city. We have the full distribution of ethnic affiliation. So in the north, towards Parakou, we would have more Fula, Samba, Bariba people. And in the south and in the middle, it's predominantly Fon, which is the main ethnic affiliation in the south and in Benin overall. And secondly, this is something that we thought was important, is that we cover variations in terms of religious affiliation. So the north is predominantly Muslim. The center is heavily animist, based on voodoo and witchcraft. I have done myself quite some work on voodoo and witchcraft. So if you have any question about that, I'm happy to answer. And in the south, you have a mixture between Catholic and animist. So we have a nice, we cover largely, and that's, we do not claim that the survey is representative of Benin, but it is as much as we could with the funds we had and the time we had. We cover quite an array of different contexts. And finally, a fact, sadly not well known outside the country, but the football team of national football team of Nigeria is called the Super Eagles. The one for Togo is called the Stallions, and for Benin it's called the Squirrels. I love very much this fact. Here's the context. So we have a formal saving, which is simply a device which is backed by a legally binding contract. The classic example is a bank account or an MFI institution account. Microfinance Institute. So I will use MFI. Most individuals in Benin do not have access to formal saving, and there is a clear reason as to why. It's either lack of funds, the distance to branch is significant. We'll play on that. This is an important thing for our setup. People can't read or appear to be intimidated by a contract. So most contracts, if not all contracts, to have legal value have to be written in French, which is the national language. And if you leave Cotonou, the knowledge of French becomes more and more patchy. So that's one reason. High costs often just for maintenance of an account. And some accounts will ask you for large initial deposits. There are an additional reason that is not listed here, but is lack of ID, but this is becoming less and less the case. Anyway, we are in a context where most people use informal saving. Now, what we mean by informal in the context of Benin is that people save at home. So it could be money in a jar, money between two cracks in the walls or something, somewhere which they deem safe in the house. It could also be savings being given to a friend, person of trust. It could also be through what is called an itinerant banker or deposit collector, known in Benin as tontinier. These are widely seen in Asia, for example, but also in Africa. It's briefly, I will explain, I'm not sure if all of you are familiar with that term, is an individual who is a banker. It's entirely informal. There is no licensing of this. That individual has a place to store money, a safe in his house, and will have clients. And usually these clients will work with a sheet or a little card on which there are 31 boxes. Every time a client gives a banker a predetermined sum of money, which is a deposit, a box is ticked. And at the end of the month, the 31st deposit made is taken by the banker, and the rest is available for the client. So the fees are 1 divided by 31. So small fees, there's no interest rate. And the banker is ideal for people working in the marketplace where they have large cash flows and they want to quickly get rid of some extra money. That's also widely known and widely used in some contexts. And finally, we have something that also may be familiar to you, is called the saving groups or rotating credit and saving associations, known as ROSCAS. So I will use the acronym throughout. These are groups of friends, or they could be professional associations also, but people will usually know each other. They will meet on a regular basis, and that basis is set by the group. It could be weekly, for example. At a given meeting, all members would put a contribution. The sum of this will constitute the pot, and the pot is given to a member at each given meeting. So you receive once the pot and you contribute during the whole cycle. So what you put in is exactly what you get out of it, but there's no interest being paid. And there are some risk association with that. I'll come back to that later. So these are the main informal devices being used. So by the way, when I talk about Benin, I have, as I'm getting old now, I can say I have quite some background in Benin. I have been working there since 2003. My first pilot were in 2003, and then I kept working with larger and larger surveys. So these have been around since then. So we know from past work, which I just described, that Beninese households do save. And that's rather impressive, knowing the context. They have roughly a saving rate of 5 to 10%. It varies according to year and the sample you take. But interestingly, this is very much in line with UK's current saving rates. It has peaked with COVID, but if you look at the last 20 years, the UK saving rate is between 5 and 10. So there is scope for using devices to store your saving. Most of the individual we've met will save at home or on themselves. A fraction, 30% around will use Rosca, 15% will use a deposit collector, and around 20% would use a device that I've not listed here because it's used for healthcare, but it does require regular contributions in the form of premiums. So you could say that part of your saving will go there. And these are mutual, so they're based on, it's an informal health group, if you want. I'm not going to give more detail on this now, but these are the main ways through which people channel their savings. We know simply because of the design of these devices or by serving individuals with open-ended questionnaire with that these are not safe. Some of them are, well, saving at home is not safe. You could be, there's thieves around, there would be fire. You could lose your savings through a deposit collector. There are these wild stories where a deposit collector will just collect deposits and then leave the region with with money from clients. There are very few examples of that, but you know, it's an urban legend that people like to maintain. But it still plays a role in people's psyche. There is the risk of default of Roscas. Yes, of course, if a member is not doing well financially, he may stop contributing, and you might be the member who will bear the brunt of that because he will not be able to pay a share of your pot. So that might be a problem. And also, Roscas are known to be a very inflexible device. So you pay on a regular basis, but you receive the pot once, and that's that. So if you were to withdraw from that group, you can only do this once, and that once is allocated through different means. We can talk about that, but it's not flexible. So all in all, we can safely say that these are not optimal, and that leads me to talk about the formal devices, but also to see that a formal device could potentially help on this. They could be more secure and they could be more flexible. So that's for sure. Now, in the situation we have in terms of uptake of formal devices is the following. So we have 10 to 15% for banks and MFI, and 25% for mobile money. So there is scope to increase uptake for both. I will compare the situation of a Benin mobile money market briefly with the one that you may know better in Kenya, and a few slides down the road here. So I need to keep time. So I'll come back to that. But the question is which one do we want to promote within the context of this study? We focus on two because they are the only two. I will disqualify just now the private banks account. So by that, we mean big banks as such as Bank of Africa, Société Générale, BNP Paribas. These are well-established banks that have branches in the country. The reasons why we're not going to talk about them is that often the accounts are too costly and can be useful for relatively wealthy individual in the country. And secondly, they have extremely poor network coverage. So there might be a few branches in Cotonou and then Parakou, and that's about it. If you leave big urban centers, you won't have access to these. So that the scope of this study is to have something larger that could be extended to the whole of the country. So by excluding that, we're okay with it. So that leaves us with an MFI account, but we need to identify who could be the provider, and mobile money. So in the context of our study, these are the only two that are accessible, that are usable, and which make sense, which could be promoted by a government, for example. So there has to be some policy implication. The first one is an MFI, and it's easy to identify only one provider which has a large enough network so that we can reproduce the results in different sites. And this is what is called FISICAM. FISICAM is a whole bundle of different branches. They're all cooperatives. A cooperative is called a CLCAM, so I'll use that term later on. CLCAM is a branch of a FISICAM, and they're cooperatives. So that means that if you become a member, then you can be a client and you can vote on various different issues. So the FISICAM is owned by its members. It's not entirely a private bank as the ones that are listed down the slides here. The entry fees are low. The network is extensive. There is more than 100 branches across the country, and it's much better suited for poor. And the second one we want to look at is mobile money. There's no entry cost, very cheap, and there's a wide network of agents. Agents are required for you to make some transactions, so it's important to have that in mind. And they're flexible, much more flexible than the MFI account, but still the MFI account is flexible. So you can go during opening hours and do your transactions. So I really want to stress that because we often receive the comment, yes, but you're looking at two different tools for savings. Yes, we agree with that. They're different. But in the context, what we want to say is there are only two formal saving means that can be promoted here. So why don't we just do an RCT where we have treatments for each of these and compare the results? Maybe an institution later would be interested in that and see, oh, if we promote X, then we get that result. So let's go this way. It makes more sense. So it's with this approach that we are comparing two tools which are not perfect substitutes, and we are fully aware of that. So what we want is to use an RCT and to look at these two formal devices. And the questions we have are classic ones. So what can drive the uptake after our randomization? What drive usage? And what are the impacts on savings? So we're only looking at savings here in different forms. We could look also at a whole host of different metrics. We have not done that at the moment, but we will. But there's enough to say about savings today. So the caveat that I mentioned is that, yes, there are different devices and there's a policy implication. That's why we look at these two together. Okay, so that's that for the context. Let me have a few words on these two devices before I go on to talk about the expected impact of these and the literature. And after that, our data, sampling, and results. So you need to know a bit more about the devices. So the CLCAM account is one that is offered in one of the 100 branches. These saving accounts are very simple. They earn no interest. You can deposit and withdraw freely. And they are, as is a classical feature of MFI accounts in that region, they are monthly account maintenance fees of 500 CFA if you maintain a balance above 20,000. So if you're a very small user, infrequent user, or very small, then you won't be affected by that. But 20,000 francs CFA is really not much in terms of saving. Now, what is interesting with CLCAM is that the holder of an account can be given to credit to a loan. And the conditions are not listed in this paper, but they are simply in line with keeping a certain balance for a certain number of months, after which you can be offered credit. We are not looking at allocation of credit within CLCAM in this study. This feature is mentioned in our spiel when we do our treatment, as in this can happen to you, but this is not something we actively promote. But it can play a role, and as you'll see, it does come up in the result later. It's important to mention that access to credit is not something that comes with mobile money. So that's one of the differences. So what is our treatment related to that product is we offer a voucher, and opening a CLCAM account is more technical than simply opening a mobile money account. So we give a voucher. If the voucher is accepted, it could be used by the beneficiary to shoot an ID picture with a specified photograph in the neighborhood. So we have a number of neighborhoods, we have a number of photographs being identified. Once this picture has been taken, the beneficiary goes to a sale cam with the voucher in that picture and his or her ID card to have the account open. And we also cover the cost of opening the accounts, and we provide an incentive deposit of 1,000. Okay, so if all that is done, then the individual has an open account of 1,000 francs CFA. We are not covering the 500 francs CFA costs, running costs or maintenance fees that I mentioned in the previous slide. This is to be covered by the client. I want to say a word about ID card. I'm not sure about South Africa and countries around it, but in West Africa, ID cards have been historically slow to be distributed to individuals. Benin is one example. So early 2000, we would have a very small fraction of individuals having an ID card, which would mainly be either a passport, which would be a tiny fraction of the population, or a replication of the French format, a national identity card, which also was not being issued fast enough to cover the whole population. Until 2014-15, when the government decided to issue national ID card, which are also called voting cards. These are used for voting, and these have been massively and quickly distributed for most of the population. So this has been a success, which means that a problem which existed in the past for us to get access to a formal device has been lifted with the wide distribution of this ID voter card, which is used. In fact, in our sample, we have almost 90% of individuals we survey which do possess one, so they can open an account with it. The second formal device is mobile money. You may know more about mobile money than I, because the company running it in Benin is from South Africa, is called MTN. And so there are two players in Benin, is MTN and Move. These are large corporations, so they're not small players, but they compete for the market, which is also a difference that between Benin and Kenya. I'll come back to that later. It's not technically within the banking system. These accounts are offered by telecom companies, and it started in Benin as peer-to-peer or person-to-person payments without the need of a bank account or a wire transfer. So very convenient for that. Now it has evolved into a store and hold money. So you can, if you want save, there's no interest rate being paid, but these are the only two function. And again, that brings an additional difference with the Kenyan context or a more advanced context. You may wonder why I keep mentioning Kenya. It's simply because that country is a pioneer and is way more advanced than any other context in West Africa. The reason as to why it puzzles me, but anyway, in Kenya you would find many different services being offered. For example, payment of wages, payment from governments, and business to business, and so on. But in our context, it's either transfers, received sent, or storing money. So withdrawal deposits. To register, the new consumer first has to show up at a mobile money agent. And also we need to clarify this, agents are everywhere. You can find them around towns, villages, at every day, all time of a day. They're really, really everywhere. So these are small retailers. They can also be agents selling airtime for pay-as-you-go system, or they can just sell food at the corner shop. They're everywhere, okay? And the process to open the account takes a few minutes, much quicker than opening a Selcam account or any bank account. How to withdraw, deposit? Well, this I'm sure some of you are familiar with the mobile money system, but I just want to make sure we're all on the same page. Is you can deposit by handing cash to an agent. The agent will use his own phone to communicate with the database of his provider and credit the money to you. And the withdrawal is made by also visiting an agent who will make sure you've got enough money, and then it will end the cash to you after, if that's the case. The transfer of money from one user to another can be made by using the phone. And these are very simple, if you want interface on your phone. They can be used by, they are used, in fact, most of them on non-smartphones. So widely available and relatively easy to use. However, it was an issue for older users on the field. And it also shows up in the data and the results that we have at the end. So despite that, there is still a barrier. Each transaction can be costly, except for deposits. And specifically for transaction fees can be quite high, around 10% of face value. And there are additional fees if you transfer from Move to MTN and vice versa. There's no interest, there's no monthly running fees, and there are no other standard bank services offered to them. We can go on other details, but these are niche details. So I'm happy with that succinct description. Okay, I've talked about the wide network of agents, so I don't need to go back to this. Across all our sites that I will discuss in a moment, we have a large supply of agents. This is not an issue. Now, comparing that to Kenya, I've already hinted at most of the points here, but the penetration rate in Kenya is much larger. The provider is interesting, is there's a monopoly almost in Kenya, and that's not the case in Benin. And as I said, the portfolio of services offered to users in Benin is much smaller. So what is our treatment for mobile money? We offer an incentive deposit of 2,000 francs CFA. And we also on the spot offer assistance to activate and use the account. If it is accepted, then we can activate the account on the spot because we were given machines or devices by Move and MTN to do so. So it was a very quick procedure. Now, I want to talk a little bit about the literature. It's not a vastly rich literature, but there are some key results that we can look at. I think the literature on mobile money is growing because we've realized that this is most likely the future. But let me have a few slides on the impact of saving accounts, either offered by an MFI or a bank. And I want to point out 3 results. The first one is from Dupin and Robinson, where they use a rather, shall I call it, tiny sample in Kenya. And they see that there are positive results for women only, the subsample of women, for daily investments and expenditure. So it's very helpful for women, but it is based on a small sample in a town. So these are petty retailers for women, subsample of women, and male are mainly taxi drivers or driver of any sorts. So positive and significant for women in that case. And the last 2 examples show no significant impacts, but they're based on much larger distribution or treatments. So Prina is on Nepalese data. She finds no impact on savings and on a whole host of other metrics. There are at the margin some interesting results where there is reallocation of expenditure and so on, but the main thing is that we would have expected something on savings and income 2 years after, but there's not much happening. Okay. There are indications that people are better able to cope with shocks, and that's interesting. But again, when you start a survey like this, you think surely this treatment will impact savings and perhaps investment and assets, but that's not the case for Prina. And similarly, a much larger study this time by Dupin et al. They look at 3 countries, very different contexts, Uganda, Malawi, and Chile, and they find no discernible ITT effects on savings or any other downstream outcomes. It's 2 years after. They find average monthly deposits are sizable specifically for Uganda and Malawi, but on the whole, nothing is changing according, if you look at savings and other important and related downstream outcomes. So the message we receive from the literature is that this is not a silver bullet. It's not exactly creating waves of changes where we expected them. Briefly on the impact of mobile money, there are two well-known papers on this by Jack and Suri, again on Kenya data because it makes sense. It's a large market, so there are plenty of observations. They find that it's good for informal insurance. They become more sustained and more and better suited to deal at shocks. And transfer are made between members who are more distant. So that's interesting. And another study, which this one is even more comprehensive, they look at the variation in the number of agents, which seem to be random between 2008 and 10. And they find that by increasing the number of agents in a region, that also brings an increase in financial resilience and saving. So, and women tend to move out of agriculture and into other businesses. So there are some impacts that are significant related to mobile money, but not much when we look at saving accounts. Okay, so our work now, I still have about 20 minutes, I'm guessing. So plenty of time to cover this. So this is the timeline of our work. So it was a lengthy pilot, baseline, the treatment, and the follow-up. We had another follow-up, but we're not using the data for that. So the follow-up is essentially 11 to 12 months after the treatment. Okay, so that's what we're having today, the follow-up 11, 12 months after the treatments. I cannot go on without discussing the arrangement within a Beninese household. And it's important because it drives how we set our interviews. So since 2005 or 3, when I started working there, we quickly realized that husband and wives are not pooling income. They are very secretive about their activity. And one quote is a standard one, is that the less that he or she knows about my activity, the better it is. And this is not something that we expected. We thought it would be very much centralized. The couple would be as one individual with maybe in some cases one with dictatorial power, as in how to we allocate the money. But in Benin and in other contexts along the coast in West Africa, it is very much separated. So if we ask systematically to all women and male separately, can you estimate your spouse revenues? And do you think your spouse can estimate your revenues? We get a largely negative answers. And this is irrespective of age, education, religious affiliation. It seems to be a fact that husband and wife operate as two separate units. So that means that our unit of observations here are not households, but individuals. Sampling issues, we have 12 neighborhoods that are selected. You see the distribution here. Each of them are residential. And we are working within 1 kilometer radius around a CLCAM branch. So we did select branches according to, does it make sense to go in that neighborhood? Is it residential? And then we made sure to be within a kilometer radius of that branch. We are very much aware that the uptake is going to be driven by distance and the usage also. So we wanted to minimize that aspect because it's not particularly interesting to fall back on a well-known result. So by limiting the radius, we hope to minimize this effect. It comes up in the result a little bit, but nevertheless, that's why we have that setup. Now, even in the largest city in Benin, there is no list or repertory of roads, streets, houses, homeowners. There's no list. So there cannot be a random selection. We have to work according to a pseudo-random selection technique, which is you select spots. From these spots, you ask your estimators to start, and they move in various directions according to a pre-plan. And every, say, 5 houses, they will have to stop and take that house. Could be on their left, on their right. Here we decided left. And within a house, if there are multiple households, then you apply another pseudo-random technique. For example, if it's your first house in the day, you take the first on your left. If it's the second house on your day, you take the second one on your left, and so on. As long as the rule is applied uniformly, you will end up with something that's hopefully representative. Okay. And again, I reemphasize the surveys are conducted individually, separately, with husband and wife. So that means we're not surveying the husband in front of the wife, and same for the wife, because we will get biased observation. Because secrecy is important, and that's what drives many different things. Let me just okay. So here's the sample we have. Let me focus on the first E1 is equal to 706. This is a subsample of people who are eligible because to SailCam only because they have no formal account, but had mobile money at baseline. We have E3 is a bunch of individual, indeed 1,723, who have neither of the devices we're promoting. And finally, we have E2, where you have only individuals who are eligible for mobile money. These individuals are eligible. That means they have an ID card and they can technically be selected. Okay. We construct our T and our C sample according to the simple equation you've got there. So we have a slightly smaller control compared to the treatment, and we use fully all subsamples. First, look at descriptive stats. We have mostly female, live-in couple, household size of 5, valid ID card, most of them, and education. I'm not going to talk about the savings at the bottom. It's there if we want to go back to it, but I already talked about those averages for usage of some devices early on. So this is broadly what we're having. We had initially, there is a chat, so maybe I have to.
It's concerning the recording. So.
Oh, okay. And please do interrupt me. You know that soloing for a full hour is, you sometimes ask if you're alone in the room. Don't hesitate. I'm very happy to interact. So I'll move on to the next slide anyway. Again, additional information on monthly savings in various informal channels. All this to say that itinerant bankers seems to be used widely. Roscas as well. Self-help group, these are, sorry for the double notation here. These are the mutuals, or okay, the informal help mutuals, and the cash at home. I don't want to spend too much time. It's just to say that there is action. If we look at the subsample without any formal device at baseline, these devices are used. Now, if we look at just right after the treatment has been applied, we look at the SailCam account usage. So MFI in that case is SailCam. We have the voucher uptake, which is quite high, and the account uptake at 52% is, frankly, according to my humble experience of doing RCTs, is quite high. So it's not magnificent, but given the complexity of opening the account, the picture, and going to the branch, it's very much workable. After that, we have made at least one transaction, two transaction. So bear in mind, this is 12 months after. And we have 1, 2, 3, 4, 5 transactions. We use the term active users for 3, 4, 5 transactions or above. And this is a standard way of defining an active user, notably in PRINA and other papers. So we're not just creating that, it's been used elsewhere. So if we look at the number of transactions, there is a small fraction of active user, 13%. Is very small. The number of deposits and withdrawal you can see here for all users is 3, around 3. And so bear those figures in mind, 13% of active users and around 3 deposits and 3 withdrawals for Selcam. If we move on to the mobile money account, then we have a larger uptake, not surprising because it's a much simpler procedure. We have a much larger fraction of active users, this time 48%. And we have account use, all users, we have a much larger number of deposits, withdrawal, transfer sent, and transfer received. So if we look online, withdrawal and deposit, it's almost 4 times more than the Selcam. Now we could stop the show here and say, well, it's obvious that with those figures, you're more likely to detect something with mobile money than with Selcam, and I would agree with you, but I just need to go on and prove that it's the case. So we have some traces of that in our estimation later. But anyway, these descriptive stats already tell a story that mobile money is a success in terms of uptake and in terms of usage. Sadly, I cannot compare these figures in terms of transaction with long-time users. We do not have access to this. I would have liked that very much. If, for example, are these numbers more or less standard with other patterns you could see with long-time users? I do not know.
I'm sorry to interrupt. Can I just ask, over what period was that? When, 1 transaction, 2 transactions? I'm sorry if I missed that earlier.
No, don't worry. It's 1 year, 11 or 12 months. Okay. Yes, okay. It's and again, these notion of active users over that period is a standard definition. So we're not making this up. We just wanted to be able to compare with other sets of results. So again, I've mentioned those results. I don't need to spend time on this. So if we look at the uptake of the MFI or Selcam account, I'm not showing you tables because we have tons of these. We look at various specification and there's not much coming out. So we try a different set of controls. And what comes up is the uptake of Selcam is driven by the distance to branch. So larger distance reduces uptake. And that even when we work hard to be very close to a branch, and has received any loan in the last 3 months. So that increases the uptake. Maybe this is due to the perception that if an individual is a good customer, has a balance which is stable and sufficiently large enough, he can potentially receive a loan from Selcam. This again is not advertised by us, but we do mention that when we have the treatment. And that shows up in that result. Now we look at what drives the usage. Again, we have a whole host of different results. What comes up, there's not much, is the distance to branch is reducing the number of, the probability of making at least 1 deposit or withdrawal. Larger household size will reduce the probability of at least 1 deposit or withdrawal. And bizarrely, the last result, I think it's, I'm not particularly, well, I'm a bit puzzled by it, is that if we increase level of education, we have a smaller probability of using the device. But the first 2 results are intuitive, they make sense, but we don't have more than that in terms of a narrative. There, we've tried different combinations, but these are the only 2 consistent results that we can get. Now for mobile money, We have the uptake. So the uptake is, maybe it's not clear enough, but out of the sample of treated, what is the fraction that people accept the voucher or the treatment and end up opening the account, either mobile or Selcam, just to make that clear. Now, if we go back to mobile money more precisely, the uptake is driven by the variable we used also for Selcam, which was not significant, but if the self-assessment of financial situation is very difficult, then that increases the uptake. If individuals were active at baseline and they use either itinerant banker or Roscas, that increases their uptake. That's a nice result because it will come back later and it will tell, it proposes a story that we need to polish and make more solid, but it's an interesting story. I'll come back to that in a minute. And if you work in informal sector, it reduces the uptake. Again, this is a consistent result, but I'm puzzled with this one. It might be why we define informal sector. Anyway. And what drives the usage? Well, the usage, we have different variables coming up, is that being female and living in couple significantly and strongly drives the probability of making at least one deposit or withdrawal. This is slightly contradicting the story that I told you about, that male and female are two separate financial entities. And that again is puzzling me because I have done work on Roscas, on itinerant banker, and never female and living in couple drives the use of those informal devices. So I'm a bit puzzled with this as well. It may be because it's a nice and quick device to use to hide money from the other spouse. It might be that. Anyway, the second point is that there is an impact of age, and it mimics very much the intuition. Older individuals become less likely to use, but it increases or follow an inverted U-shaped curve. So younger generations is less, it peaks, and then it goes down at around 50. And the life expectancy in Benin is around 60, 61. Now, with mobile money, we can also look at transfers. So we look at transfer received and sent, and again, being female and living in couple increases that, household side also, and using other formal devices also increase the usage. So what is, I think, nice with our setup is that we have variations in our control and treated individuals in terms of using or not at baseline formal finance. So that means we're able to look into this. Now, if I look at the impact on the number of saving definitions, so ITT offered an MFI account, that's treatment one. There's 6 columns about savings. There is no traction. Nothing comes up significant. We have a dummy applied for any loans in the past 3 months. So that's 3 months in our follow-up period. So that's not at the baseline, but it's in the last 3 months when we surveyed them 12 months after the treatment. So no traction. This is very much in line, sadly, if you want, with other results I discussed before. And another table that we have is about the mobile money impact on savings. And we see total savings is increased significantly. And there seems to be a channel through which it grows. It's by itself, mobile money, but also Roscas. So there is a story we need to substantiate more, that is that mobile money feeds in Roscas. Now, this is very difficult, sadly, because the timing of the Roscas is not always known for each individuals, and meetings can move around. So it's difficult to have a good systemic timing of transfers and a Roscas meeting. But in any case, I'm not sure if it matters, because if you have meetings on a regular basis, if you feed that, and if it goes into the Roscas by itself, it tells a story. Now, if we look at heterogeneous impact, that is to say, we interact our treatment with various variables, we can look at gender, education, other uses. use of other devices and so on. We find nothing discernible for CLCAM. And for mobile money, it comes up again, this idea that if you're a ROSCA member, then there's an additional positive impact on overall savings, and that's coming from mobile money treatment. So I want to conclude here by saying that, first, you've been very patient, thank you very much, but mobile money brings significant impact on savings. That's the only one, which is not the case for MFI account. And, you know, there's in development, there's this line of approach, which is perhaps if we distribute widely formal savings, it will gradually evict or make informal saving disappear. Our very humble results seem not to show this, that formal saving device such as, or storing device such as mobile money seems to feed in the ROSCAs. Okay, we need to beef up this narrative, but that's what we have here. And yes, so that's me. I hope I wasn't too long, and I would be more than happy to have any questions.
Thanks a lot, Philippe, for a very interesting presentation.
Thank you.
We can open the floor for any questions. There's time. Anybody would like to ask something?
I have a question. I'm Brian Hawthorne. I work on various things, but sometimes on financial inclusion projects. And I was wondering whether you had a look at the impact on credit at all. So as there's this quite big fight, as you may be aware. I think Banerjee and Duflo have this paper about like whether MFIs are good or bad, and you know whether people get into debt traps and all of that kind of thing. And I was wondering, you know, whether you were able to kind of look into that aspect of things. I mean, since you have an MFI as one of your providers, and then maybe the mobile money people. I don't know if they offer credits in Benin or not. I'm sorry if I missed that. But I was just wondering about the credits sort of aspect of it.
So, thank you very much, Ryan. We do have data on this. So we do have data from the SailCam side. We're happy to provide data on this. So if we have follow-up, and we can ask them if the clients were treated in the 12 months after, if they had received any credit from them. Now, as I mentioned to Lukasz at the beginning, this data set looks old, but we entered a very long, protracted relationship or interaction phase with MTN, in fact, and they were reluctant to give some data that they said they would give. So we wasted a bit of time on this, and then COVID hit us really hard. We had different people on the field who couldn't work. So we're just starting now. So this is something we want to look at, but we haven't, but we do have the data. I'm afraid I cannot give more than this.
No, that's great. Thanks.
I also have a question. So when you look at this estimates of uptake of savings and mobile money, do all these people have cell phones? I mean, like the sample that you included, that you used, they're all cell phone users, or there are people who don't have?
That's a good question. I should have mentioned that the penetration rate of cell phone is very, very high. I don't think we had anybody being excluded from. So the sample that I showed with the Venn diagram includes only people who have a cell phone and who have an ID card. So that means they can potentially use the two treatments. But we did not reject, I don't know on top of my head, but that would be a very small fraction. So essentially almost everyone has access to a non-smartphone with a SIM card in it. The SIM card are freely distributed. as it's the case in the UK now. So that was not a major, it didn't play a role.
Understand.
Thanks.
Also, just one question. So one of the issue around mobile money is about interoperability between different, not only between mobile money, but also with other services. And does it exist in Benin? And how easy it is to move money between different types of savings account?
Okay, so thank you again. That's a good point, because it's currently a very hot topic for MTN. MTN is now, with the flow of transfers that they have, even if they've not reached a large portion of the population, they have a customer base large enough to have a flow of transaction, which makes them the largest financial player in the country. The banks are very much afraid of this, and they have made everything that they can so that the Beninese government is not issuing a bank license to MTN, for example. So there's a lot of bitterness between the banks and MTN, knowing very well that MTN is the largest player and could do damage very well by either buying them or I don't know. So the last time I discussed that with MTN, they said that they were just waiting. If that opens up and it's easy for them to be licensed, after that, there could be talks about mobile money bank account transfer. But at the moment, it's not working.
That's very interesting indeed. We still have time for any question. Anybody else would like to ask something?
Good afternoon, it's Marna speaking. I would like to ask a question, and apologies if I've missed it. I think on one of your previous slides on the uptake, you've made the comment that self-assessment of individuals' financial situation is very difficult or it increases uptake. Yes. Could you elaborate on that point? Did you ask participants to do a self-assessment of their financial situation, or
yes,
what did you mean?
I have to say that I'm not particularly a fan of these questions because it depends very much on the context. So self-assessment is a question we introduced in our questionnaire to see if we had any traction, and indeed we have in that case. But we ask them, so we have, how would you rate your current financial situation? Is it good, bearable, difficult, very difficult? So these are the gradients. And if we constructed a dummy only for very difficult because we had a significant share for this and it comes up as significant. So if an individual self-assessed a situation as being very difficult, which is the worst in our in terms of our answers available, then that increases the uptake for mobile money.
Okay, that's interesting. Thank you. Just a comment. I think on your last slide, you mentioned that you need some sort of narrative to explain why ROSCAs would continue to be very popular despite mobile money. I have done some research on savings groups in South Africa, but I've got quite a few perspectives on that topic if you do want to have a discussion.
Oh, Marna, do you mind if I write you an email after this presentation?
Absolutely, that'd be great.
Oh, thanks very much. Maybe there's a chat box in which you could just type now. Is that feasible? Yes, there's a could you type that in the chat?
Sure, I'll do so. Thank you very much.
Thank you very much. Thanks.
No problem.
Thank you very much. So maybe last question, if there's anyone who would like to ask something. Okay, I guess there are no more questions. So thank you again, Philippe, for your presentation, and good luck with your future research and publishing the paper. We're looking forward to see more of this.
Okay.
And thanks everyone else for attending. Thank you for your time.
Okay, thanks very much for the invitation. Thanks for attending. Thank you.